will be telling us about the next Canadian diamond mine in construction at Renard Project. Matt?
Thanks, Howard. Thanks, everybody. Yes, so the Renard Diamond Project on track to being Quebec's first diamond mine. And the usual forward-looking statement, which is getting longer and longer as we go through this. So Renard is very much Stornoway's focus here. We have 100% ownership since the acquisition of the 50% interest owned by SOCAM in 2010. We are very advanced at this stage. We're on track for construction startup this year. And really, so the headline features, the investment imperative for this company in Renard is based upon the strong base case economics of the project, but you know, the one attribute that we state quite confidently as really world-class is the resource upside, and I'll focus very much on that in this presentation. There's a road under construction right now, an all-season road, so we expect to be the first diamond mine in Canada that you can drive to the gates of year-round. We got our mining lease issued in Quebec in October and the Quebec Certificate of Authorization in December, so that's our principal permit. There's some more to come, but that's the principal one. And then project financing, we're working on a sizable project debt facility. We announced in September that we were working with 7 lenders on a mandate basis with a draft term sheet of up to $475 of project debt financing, a 50-50 debt equity ratio with 7 commercial lenders. Thank you, Patrick, for going through the diamond supply and demand thesis, so I don't have to do it here. That's the benefit of coming second here in these kind of sessions, but like everybody else, we subscribe very much to that thesis. It's a great commodity to be in on a long-term basis. There are very few new mining projects, and as Patrick was saying, you know, these assets are genuinely hard to find. This is the hardest game in mineral exploration, and if you've got one of these, they're valuable. This is the page showing faces and the Investissement Quebec on our board of 3 members. Yves Cherkis, our chairman, formerly of Agnico Eagle. Patrick Godin at the top there is a key guy. He runs our head office in Longueuil and is our mining engineer and chief operating officer. We're building the mining team in Montreal, having moved the head office there last year. And that bottom row is growing over time. We intend to be the owner and the operator of this asset, 100% owned. So that's our team that we're building. We've got our technical team based in Vancouver and our mining team based in Montreal and our community team based in Chibougamau and Mistassini. Here's the balance sheet, about 125 market cap, 160 million shares outstanding, $31 million in the bank as of our last financials. That's more like 20. We're spending that money doing pre-development work here. Investissement Quebec, it's the Quebec government's sovereign wealth fund essentially, is a 25% shareholder. 34% fully diluted. That came through the acquisition of the SOCAM interest in the asset. Agnico are in there at 10, and the Case of the Pose, our biggest institution, at 9%, and I see a couple of other shareholders here as well. 5 analysts covering us formally with models, 2 more with less formal coverage, 4 buys, 1 market perform, $1 to about $2.75 target prices. So Renard, I'll remind you, is up in the James Bay area of Quebec. That's the map in the inset. Roads and power lines surrounding us of the Hydro-Quebec network of power stations, and that dashed line is the road which is connecting us under construction right now, connecting us to the provincial highway network. 9 kimberlite pipes and a bunch of sheets. Everything is diamondiferous. The red labels are the ore bodies in the reserve. The dark blue are in the inferred resource. The light blue, Renard 1, we expect to come into the resource at some stage, and we could probably say the same now about R10. So Renard is distinguished by being a relatively small cluster of kimberlites, but a high proportion of economic ore bodies. That's quite unusual. So definitely an interesting situation. The road is what makes this project very high profile in Quebec. Under the Liberal government of Jean Charest, this was the first project to get started under the Plan Nord. It's probably going to prove to be the only project to have gotten started under the Plan Nord. It is a 240-kilometre road. It started as a 2-lane gravel highway. In the fall, the Quebec government, the new Quebec government, came to us and said they wanted to redefine the deal. So it is being finished on the basis of Quebec building the first 2 segments as a 2-lane gravel highway to kilometre 143. That's essentially done. You can drive along that route now, and you can see some inset photographs from last September of the construction. And then the last 2 segments, which are about 90 kilometres, C and D, are being built by us as a single-lane mining road, which is cheaper and faster to do, and we're being financed up to $85 million. The base case budget is 77 to do that, and that's a loan that we repay at 3% interest after commercial production on a 15-year amortization. So it's essentially I've lost my mic, I think. No, I haven't. It's essentially a mortgage-type facility to do this road. So we're essentially, the first 18-wheeler got to the site last weekend. There is a winter road which has been put on successfully ahead of schedule. It's been a great winter for that. That winter road will be open until the end of March. We are currently mobilizing construction equipment to start construction of the all-season road, the single-lane mining road, in April. And we expect, we're on schedule to have road access to Renard by the fourth quarter. So our project development and project financing schedule is counting back from the fourth quarter. By the way, this road is what makes our cost profile quite reasonable and quite robust. We are a drive up the road from Chibougamau, where there's a railhead, and Chibougamau is a drive up from Montreal, where there's a port. That's why we can mine this thing at $58 a ton all in. So here's the economics. This is from a restated feasibility. It was an optimized case of the feasibility that came out over a year ago. So on the basis of 24 million carats of indicated resource, that's the green, we can mine that for about 11 years. We can declare a reserve from that 24 million carats of indicated of 18 million carats. That's after provisions for dilution and ore recovery and a crown pillar that we leave in. Initial capital is 750, and we can operate that at a 67% operating margin, which is high. Operating cash flow 2.7 billion with a diamond valuation of 180 from May 2011. After-tax NPV of about 400, after-tax IRR of 16. Now the world-class aspect of this is what you get beyond the reserve. So that picture there, the green 24 million carats of indicated, the blue 17 million carats of inferred, and the red is our target for further exploration or the upside material. That's a reasonable supposition of where these kimberlites are going. That's 24 to 49 million carats estimated. Cut off at 700 meters and open at that level. So that's 65 to 80 million carats on the page. Our capex of 750, because of the geometry of those ore bodies, buys us a mine to mine all of that. We get a ramp, and we get a tailings capacity, and we get a plant. I was involved in Diavik, and in Diavik we had, with Harry Winston, we had 4 pipes in the reserve, but the initial capital, 1.3 billion, bought you the first dike around A154 South and the first pit and the plant. So the mine plan was a subset of the reserve. We've got the opposite here. The reserve is a subset of the mine plan. The mine plan is contemplating all of that. If you put the inferred resources, we're up to a 20-year mine life. But we're financing the thing off the first 11 years in the reserve. And as Patrick was pointing out, the really interesting thing about Renard is this ore body, Renard 2. It's over 100 CPHT. It's been getting bigger as you go down. At the surface, it's 1 hectare in cross-sectional area. At 600 meters at the base of the indicated resource, it's 2 hectares in cross-sectional area, and it's open. And that 100-meter slab of inferred resource at the bottom there, which is within reach of our mine infrastructure, is almost as accretive, and it provides almost as much after-tax cash flow as the whole reserve, because the reserve is carrying the initial capital, and everything else is gravy. So that's really the world-class aspect of this deposit, it's the resource upside going down. And another way of articulating this is the following. So there's our 5 ore bodies, and the initial ones in the mine plan. That's millions of tons of ore, and we're mining at 2.2 million tons a year, so the feasibility, the reserve gives us 11 years. We've permitted, and we're building and financing the 20-year mine plan, which is over 50 million tons when you put in the inferred. And then if the red comes through, that's our 30, 40-year vision. So that is the vision of multiple generations of local people working at this project. That's why Quebec is building that road to get to the site. Now, we are still growing the resource. We've been focused on project development for a while now, but we did turn back to Renard 6.5 last year. We took a 5,000-ton sample to get 1,000 carats of diamonds. We were sampling at the northern end of Renard 6.5, where we knew the grades were low at about 20 CPHT. But the ore body was accessible at surface, within 2 meters of surface. And of course, as Brooke will remember here, Renard 6.5 was the ore body that returned 4-carat stone and drill core back in 2003, but at 30 CPHT. And that stone was a top quality 4-carat stone. So fast forward 9 years, and we finally go and bulk sample that. We get the grades as expected, we get the distribution of sizes, but the big stones that are coming out are top stones. that this is a feature of Renard. Every time there's been a sample taken at any scale, in any ore body, the big stones have been top stones. And you'll remember a 3-carat stone that came out of an RC sample, Renard 3, and there was another 3-carat stone that came out of Renard 9, and these were all top quality stones. And in the early days of this project, they really were bedeviling the value and the grade calculations. But fast forward now 9 years with 9,000 carats collected, and we see that those stones are actually representative of the big top stone population of Renard. We routinely get high quality stones, and that stone on the right is a 10-carater from a 1,000-carat sample, top quality stone, 7,000 a carat. The 6-carater was the next biggest at about $5,000 a carat. That's the signature of the Renard Diamond population. So the mine plan, ramp, underground mine development, blast hole shrink stopage with a waste backflow from the pits, and you see a borrow pit in Renard 6.5. The cost of putting a pit in that ore body is already in the feasibility, although the ore is inferred and so stockpiled in the production schedule. 6,000 tons a day, and that gives us, well, this is the arrangement, relatively low impact. We're not impacting fish habitat with our tailings. We're doing a dry stack after a centrifuge and dewatering. Open pits, underground mine, accommodation module, 3-kilometre footprint, so a very modest environmental impact, and that's allowed our permitting to go very smoothly. Diamond population there, that's run of mine for the +2 carats in Renard 3. The diamond in the immediate foreground is a 10-carater top quality stone that came out of Renard 3. Again, that's the trend. White to brown profile, no bort, about 1% bort by weight, so that makes the average price higher than the world average, and of course we've got that large stone population coming through as well. The top row of diamonds is the bottom end of brown cleavage, so a very attractive population. This is the production schedule in the optimized feasibility, so diamond production of 1.5 to 2 million carats, gross revenue in real terms of 300 to 500, that's as EBITDA, previous EBITDA of about 200, 250 a year. And when you put the inferred resources on to get the life of mine plan, we get up to that 2 million carat a year plateau, and then we essentially hold that for 4 or 5 years before we come back off again. So we regard this as a 2 million carat a year producer. That's what we think Renard will be known as. And production and the development schedule. The road is the schedule driver, it always has been. As soon as we get access to the site by road, we can start construction. So that's the 4th quarter of this year. 2 years of mine construction, first ore in the plant end of 15, commercial production by 2016. So at this stage we're ready to go. The principal permits have been received, the road's under construction on schedule. The principal issue now is completion of the project financing this year. The social license is in place. We signed our impact and benefits agreement with the Crees last March. Partnership agreements with Chibougamau and Chapé shortly thereafter. The public consultation process was completed last summer, federal and provincial, went very well. And as I said, Quebec mining certificate of authorization issued in December. The federal one is still to come, but that's not a critical path item for us. We raised 40 million last spring. We've got most of that left on the balance sheet still. And the debt financing of 475 is with 4 commercial banks, Caterpillar, Export Development Corporation, and Investissement Quebec, our principal shareholder. And that will be the largest single asset debt financing for a diamond project when we complete it. So what to expect? You're going to see regular news flow on development milestones from us on the road, on operating licenses. We were happy with the results of our R65 bulk sample. The diamonds are currently going through evaluation exercise, and we'll have that news out forthwith. And then, number one question we get is how we're going to finance it. It's going to be debt and equity, and we'll be giving guidance on project financing through the year as those deals come to the market. Thanks very much.
Well, thank you, Matt. I'm sure it will be a relief to get a road in there after all these years. Questions for Matt?
It's about 400 kilometers, so it's not a commute. So it's the road is purely goods and services. We'll be commuting on a 2-week in, 2-week out schedule with employees derived principally from Chibougamau and Mistissini. But certainly, we're looking at about 3 tanker loads of diesel a day. So it's not a huge shipping requirement, but having the ability to just call it up on a day's notice is the advantage there. No, we commissioned the feasibility with Hydro-Quebec last year to bring in a power line from La Grande Four to the north. It's about 110 kilometers, about $170 million. On that basis, it's a break-even proposition for us at best. So we've elected to commit to diesel and gensets. I think on a life of mine basis, the power line is something we have to bring in at some stage. And the basic deal with Hydro-Quebec is, you pay for it, they own it, they sell you the power, and the power is cheap. So 6.5 cents a kilowatt hour compared to about 29 cents a kilowatt hour to generate with diesel. But we want to minimize upfront capital in this project, and so that is a proposition which is not palatable to us at this stage. But with the project up and running and refinanceable, we'll certainly look at that. But when the plan was launched, this road was shovel-ready, which is the cliche. And not because it's our road, it's the community's road. That road has been the vision of Chibougamau and Mistissini for years now. And the vision is a central Quebec access corridor that goes up through the Otish Mountains, connects to the Trans-Taiga Highway, and then ends up at Kuujjuaq. So, we are a beneficiary of that road, and we are helping to finance that road as a good corporate citizen and putting quite a lot into it. But the work that was done to define that road, pay for feasibility studies, was very much coming from the communities. It's their vision. So when the plan was launched, Chibougamau's vision of a central Quebec highway was seized upon and launched, and we were the first industrial partner of the Quebec government to step up and do our part as well. So now, 2 years later, with a new government, our road's going ahead, and it's going to be a success for us and for the communities. But I think everyone's seen, we've seen the issue with CN railway lines up to the Labrador Trough. Some of these other infrastructure projects that were on the table a couple of years ago may not be so lucky at this stage. But for us, we've got a clear path now to having vehicle access to our site by the fourth quarter. We're building a team right now. So we're in expansion mode, and we're hiring into our project development office in Longueuil, and we're hiring right now some of the more specialized people that you require in diamond business. We've got a lot of those people already, but we've had some recent hires which have been important to us in filling the important specialized silos. That process will continue over the next year or two. And then the more general workforce is going to come, like any mine development projects in Canada. It's going to come from all over, and we're going to be the logistics of bringing them in will be from Montreal and through Chibougamau. We're very lucky to be in the Cree territories. The Crees have a very large skilled labour force there. There's been mining in the past in Cree lands. The Troilus mine of Inmet was south of us. It closed down a couple of years ago. GoCorp are building Eleanor to the west of us. So there's a labour pool there already. There's obviously a mining labour pool in Chibougamau, and there's a big a local network of service providers. So, the IBA for us with the Crees is as much about us being able to tap into that system of skilled labour and businesses on good terms as anything else. So that's how we intend to do this. The original budget was about $330 million for the 240 kilometres, and that was the two-lane gravel highway. We intend to build. We'll have to see what the final cost is from end to end when the government have finished their piece and we've finished our piece. But we've now gone out for quotes on our piece. We're pretty confident of coming in at 77, the base budget on 97 kilometres of our road. I have to say it's a fantastic time to be building a mine in Canada. We're going out for quotes and getting things and coming in below budget for the first time in ages. There is a flat market right now for mining in Canada, and if you're building something, it's the paradox of the mining business. The hardest time to finance a project is the best time to build it. This is the time to build a mine, and we're seeing that in the roads for sure.
Okay, well, thank you, Matt.
Thanks, Arden.